Hey guys, welcome back to my channel. It's your agent of trust here, Alejandra Gonzalez with the Pierre Lapierre group at Keller Williams Preferred. So this is part 2 of the most common questions asked about the lending process. If you haven't already, go watch part 1. It's linked down below. And if you have any questions, you can leave it down at the comment section. And if you find this video helpful, give it a thumbs up. Subscribe to my channel for more upcoming videos. Stay tuned all the way to the end of this video where we will be answering some COVID-19 related questions. Alright, so is there a restriction on who can give you a gift?
I would usually stick to family members, but sometimes maybe with an FHA loan, we can get a gift from a close friend, but I would stick to family members 99% of the time.
Going into this can be like a whole separate video on its own. Can you give me a little bit of detail of like the different loan programs?
So very general detail. Let's start with conventional loans. Conventional loans are usually, they're good loans because if you put at least 20% down, you can eliminate private mortgage insurance, which is a monthly charge. So that's a big plus. Credit, I'd stick to at least 630 or higher to be solid with conventional. That's a great option. There's also FHA loan options, which is a government loan. And an FHA loan has a minimum down payment of 3.5%. It is a good option if you're looking to purchase a little bit more expensive than maybe with a conventional option because it's a little bit less restrictive on the debt to income ratio requirements. Then we have a USDA loan, which is 100% financing. It has to be a property that's in a rural area, so out in the country a little bit or outside of the city area. And it's a good one because you only have to cover closing costs, not the down payment. And then finally, we have VA loan options as well. And these are for our veterans or active duty, and it is also 100% financing. I'll also mention we have different types, like we can do tax ID loans and we can do DACA. You know, anyone who has DACA or a work permit, we do have options for you as well. And then lastly, we have down payment assistance programs, which can help with those closing costs. So quite a few options out there, but that's my job, you know, to know those programs and to see what might be the best fit for you, the client.
Right, so there are special programs for like first-time home buyers that, you know, they won't maybe give such a big down payment, or, you know, if they need help.
Absolutely. Through North Carolina Housing, they have different programs. More assistance is the $8,000 program for those closing costs. We also have subsections of loans that maybe you only have to put 3% down for a conventional loan. So cool thing is we can combine them too, right? We can do a USDA 100% financing with down payment assistance for the $8,000, right? So we can do various things to help mitigate those costs if we need to.
And that's pretty cool because most people don't know that you can combine programs. You don't have to just stick to one. If we have all of this done, do we have a pre-qualification letter or do we get a pre-approval? What is the difference?
Right, there's a little bit of confusion regarding the difference. The difference is some lenders out there, they'll go ahead and write you a pre-qualification letter without actually digging into the details, right? What your income look like, etc. Whereas a pre-approval letter per se means that you do dig into the details, right? You look into that credit report, you look into the income documents, the assets, are they actually approved? So ask, you know, if you have a pre-qual letter and you're not sure if you're pre-approved, ask them, you know, hey, have you looked at my income documents? Have you looked at my credit? If they say no, then it's probably just a loose pre-qualification. Pre-approval is always going to be better than pre-qualification.
Just entering my 2 cents, whenever we are making an offer, having a pre-approval looks always a lot better than having a pre-qual, especially if you're going against multiple offers. Absolutely. Having that pre-approval gives you more power.
Right.
And how long does it typically take in order for you to get this pre-approval? Does it take hours, days, weeks?
It depends on how quickly you're able to provide the documentation. If you send me everything I ask for within 24 hours, you'll probably have a response within 24 hours. But if you send me little by little, it's going to depend on how quickly we're able to evaluate.
And if I have a pre-approval but I don't like the amount, what can I do to increase that loan amount?
Recommendations could be lower your debt, right? Maybe pay off a few accounts. Also increase your income if you can. Maybe if you were to get a raise at work or maybe a second job, that might help, so that your debt to income ratio can go down, and then therefore you can purchase at a higher amount. If there's an amount that you're not so happy with, I would ask the lender why. Why am I being pre-qualified at this amount? And I'll tell you the details, right? Hey, I can't give you a loan on top of your 3 cars and your 10 credit cards. I just can't, right?
Mm-hmm.
At that amount, your dream price right now. But if you do A, B, and C, maybe eventually we can get you to the point where you want to be.
Makes sense. Okay, and when I have the pre-approval, will my interest rate stay the same throughout the whole process until I close?
When you're pre-approved, we have not locked your interest rate yet. We've just looked at interest rates, unless you wanted it to be locked. It really depended on what the client prefers. But I'll say this, the second we lock your interest rate, you're safe. It's not going to change. Even if the market drastically changes a day before closing, it will not affect you because your interest rate is locked.
And when would you typically lock it?
Typically at least 30 days before closing, if you're okay with those interest rates. If you want to keep floating it, maybe until 2 weeks before closing, we can do that too.
And I know last month it dropped to 2.5 or something.
Right.
So if it's any time you see a 2, go ahead and lock it, right? Because it's not going to keep going down.
That's right. You have to take advantage because they're not where they were about a month ago. When you see those good deals, and that's why we're in constant communication with the client.
And the interest rate right now has been going up and down, or it hasn't been steady?
Yeah, it's been pretty volatile in general the last month. It's pretty much staying still low. Again, it's hard to say an exact number because it depends on your credit. But in general, they're low across the board. So a lot of the actions taken by the Fed specifically will be helping those interest rates to stabilize or go down within the next few months. So we're keeping an eye on it.
And you did mention something about a fixed rate. So what's a fixed rate, or what's an adjustable rate, and how do they compare? Where would you recommend one or the other?
It's just a difference in how your interest rate is applied. Let's start with a fixed interest rate. Fixed interest rate for 30 years. That means that your interest rate of 3% is not going to change for the whole 30 years of the life of the loan. Whereas an adjustable rate is a little bit different. So you might have a 3% for 5 years, and then at year 5, it might jump to a 4%. Maybe it may jump up by 1% every year, whatever it may be. But I'd recommend a fixed rate. In my opinion, I think it's just a safer bet. But let's say you want to move into a house where you're only going to live there 2 years. Then it might help you to get an adjustable rate at a really low percent, and then move out of the house, close the loan, and the interest rate never changes on you, right? So long as you do it before the 5 years or before the 7 years, whatever the type of loan program is. We just have to evaluate what your plans are.
Okay, kind of tying everything back in, when should I start the process of getting pre-approved? When would be a good time to get started?
I'd say probably start applying at least 2 months before you know you need to move, because it's going to take time. First of all, it's going to take a little bit to qualify you, to approve you. Then it's going to take a little time to find your house, right? You're going to call Alejandra, and then the second you're under contract, expect at least 45 days. Plan at least a 2-month window for this process. You're probably in good shape. If you don't have a date in mind, you just think you want to move maybe next year, I'd still recommend to apply. Because if you don't know where your credit is, or if you want to know how much you might qualify for, how much your payment would be, etc., we can certainly do that for you and set you on a long track plan, right? You might not be ready now, but you might be ready next year.
And now going a little bit into the situation right now with COVID-19. So I had someone ask, can I apply for a mortgage loan right now if I'm currently not working because of COVID-19, but I have money for a down payment and other associated costs? When things get back to normal, I will still have my same job. So can I apply for a loan now?
The key piece here is that apply now, but know that you cannot close until you are reemployed, right? Or until you're back on the workforce for safety reasons. I mean, you can't give a loan to someone who right now isn't employed. It's just not safe for them.
In the case where there's 2 people want to apply for the loan, but maybe one is not working and the other is.
Good question. The same would apply. I would say still apply with both. But if you're planning on using both people's income on the loan, then we're going to have to wait until both people are fully working. If you can apply and make it happen with just one person on the loan, being the person who is still employed, then we can try that route too. And that's the beauty of applying. Once we have the information, we can offer you options. We can say, hey, if this person who is employed applies and goes under contract, they would qualify for this amount, right? Or if you wait a little bit until you're both back and working, you'd qualify for this amount, right? And then the client can decide, what's the best move for us.
And the last question is, can I use my stimulus check for this loan process?
Yeah, you can, because that's money that is in your bank account. It's sourceable. We know the reasoning where it came from. So yeah, you can use those funds to close.
All right. Well, I think we are done with our video. I think
Awesome.
we have a lot of information for people. So how can they get in contact with you?
Yes. So my cell phone number actually is 919-889-8378. They can call or text me anytime, even if it's after hours or on the weekend. I'll do my best to respond. Or they can go to my website. You can apply directly on my website if you want to, just to get in touch with me. It is pretty easy. It's just www.ritchieloans.com. So check me out.
All right. Well, thank you so much for taking the time to give us a little bit of education on this loan process. And we'll definitely be making more videos with other information about what to do once you're under contract, you found your perfect home, other videos of people that already have a mortgage loan and want more information.
Yeah, absolutely. There's more information to come. So thank you for your time, Alejandra.
Thank you, Ethan. And thank you for watching. And let me know down in the comments section what other type of real estate material would you like more information about.